Hello, chart watchers, and welcome to this Monday, July 9th Market Watchers Live show with your hosts, Tom and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the stock market here in the U.S. has gotten off to a pretty good start today. The Dow Jones Industrial Average currently up 278 points. The S&P 500 up over 20. The NASDAQ, which is lagging a little bit on a relative basis, up more than 40 points. And the Russell 2000 also up about 6.5 and challenging its all-time high near that 1700 level, just above 1700. The 10-year Treasury yield bouncing a bit up about 2 basis points, 2.85%. Volatility continues to drop. It is now back down below 13 and certainly in what I would consider bull market territory. The XLF financials rebounding, moving back up above its 20-day moving average, as are the industrials. Both of these groups have been lagging for a while, so it's nice to see some leadership coming out of these two areas. Energy trying to break out above recent highs. We've really struggled between 76 and 77. We're back up in that area again. Caterpillar leading the charge in the industrial space, up $5, coming off of a pretty serious downtrend that we've seen over the course of the last 3 to 4 weeks. But Caterpillar having a great day today. JP Morgan getting ready for an earnings report later this week, up about $2.50, a little bit more than that, up 2.5% today. And the best performer in the S&P 500 today is Noble Energy, currently up about 3.5%, breaking above recent highs. Energy, as I mentioned, doing well, and Noble leading that group. Okay, Erin, I know it was blistering hot out on the West Coast. How hot did it get this weekend?
Oh my goodness. On Friday, our high was 115.
Wow.
I know. Actually, behind my neighbor's house, the sidewalk buckled because of the heat. So the city had to come out and fix it. Yeah, it was bad. It was very bad.
What's the sidewalk made out of that it would buckle?
It's just the concrete, I guess. The thing is with the sidewalk and I guess the dirt underneath or whatever. I have no idea. All I know is that it looked like a peaked roof after it folded.
Wow. That sounds hot.
Yeah, it was unusually hot. I mean, it's gotten back down to, just above 100. So yesterday we're like, oh wow, it's just so much cooler right now at 102. Which is our high. And after today, we're supposed to be in the high 90s. So I'm happy about that. 115 is just that's just surface of the sun for me. I just don't care for that.
Yeah, that's a little hot. And here on the East Coast, of course, we have a lot more humidity in the Southeast than you have to deal with out on the West Coast. But and we've been suffering. I mean, it has been very hot and humid last month or so. But yesterday was a beautiful day. Cooled off. Actually, Saturday was pretty nice as well. Cooled off. Highs in the mid 80s. That you could see a noticeable difference in the humidity levels that had dropped and the nice breeze. I mean, it was gorgeous this weekend. So I don't know what we did to deserve it, but we got some nice weather.
Oh yes. Well, we sent ours your way until until we get better off. I don't know. It looks like it's going to be a hot summer for sure.
No doubt. Well, we got a hot market. What we got coming up?
The market is doing quite well. Lots to discuss. As far as our upcoming schedule, though, tomorrow you have a workshop. Any idea what it's going to be on?
You know what? I hadn't even thought about it since Friday when you asked me what I was going to be on. So, hey, if anybody out there wants to have an area of the market covered that maybe you don't understand the stock charts or whatever, feel free to put it in the survey after the show or type it in the chat room. And that'll get forwarded over to me, and I'll come up with a topic for tomorrow.
There you go. Tushar Shande is going to be with us on Wednesday. Looking forward to that. And Thursday, Grayson Rose is going to be in to talk to us. It's going to be a great schedule, I can tell you. Today's agenda, of course, it's Monday, so we have our Monday setups to start it off. We have John Hopkins coming in for an earnings spotlight. 10 and 10, our first symbol is going to be Expedia. So if you want to go look at that. And then finally, I will finish it up with the DecisionPoint Report, let you know what's happening in the market and what to expect in the coming week.
All right.
Yeah, time for that technical news. Let's see what's going on.
Sounds good. Let's get into it. Well, there were no economic reports of any significance out today, so the bond market was kind of left to kind of trade on its own. We did get a little bit of a gap up. We've been in this narrow range now for about 7 or 8 trading days within about 5 basis points from about 2.82 to 2.87%. So we'll see whether or not we can get back through that recent high. That coincides with that 20-day moving average, which has been declining throughout most of the last 5 weeks or so. Actually, really probably about 6 or 7 weeks going up to the high that we saw back in mid-May. We've been seeing this 20-day for the most part moving lower. So from that perspective and from that technical perspective, we'd like to see a move back up above about 2.88%. We'll see whether or not we can get that later this week. That certainly would aid the banks as they go into a serious day of earnings reports on Friday. I believe we have Citi, maybe Wells Fargo, JP Morgan, and there might be one other in there. Bank of America, I think, is next week. Maybe PNC, I think, might report on Friday. But anyway, a number of big banks that have not been performing well for the past couple of months. It's going to be very interesting to see with the dollar kind of coming back down recently, and then, of course, the 10-year Treasury yield drifting lower. I know Jamie Dimon was one that was on record saying that he thought the 10-year Treasury yield hit 4%. And so that'll be interesting not only to see what kind of reports they come out with, but also some of just their forecasting of what they're looking for in the second half of 2018 and into 2019. But until that 10-year Treasury yield breaks back up above the 20-day, the banks could still continue to meander, even though they are having a much better day today. So that'll be something to just watch in terms of the bond market. Can we get that yield back up over the 20-day moving average? I wanted to take a look at a few sectors and look at the longer-term weekly charts. So here's the XLF, and you can see the daily chart's not particularly strong and was down here near the recent lows, 26.25 to 26.5. You can see that huge hammer that printed on increasing volume back in early May. The tail went all the way back down to about 26.30, 26.35, and that's where we just bottomed again as we turn back up. I think the XLF could make a run from here. But in order to sustain it, I think we're going to need that 10-year Treasury yield moving back up through that 20-day moving average. So that'll be worth watching. In terms of a weekly chart, though, I think this looks good. Here was the breakout on the XLF. We broke out above about that 26.25, 26.5 level in November when we made that huge run up to 30. And then since then, we've been consolidating. One confirmation or one piece of technical confirmation would come if we could see the trend line, this downtrend line break. And I would just draw it something like that. So if we get back up through maybe 27.5 to 27.75, I think not only would we be bouncing off of key support again, but then I think we'd be breaking out of what could be, you could call this a channel. If you connect these lows, maybe a descending triangle off of an uptrend. I prefer ascending triangles, but all these triangles, when they break in an uptrend, would be bullish. I would consider them bullish. So watch about 27.5, 27.75. I mean, depending on how exactly you draw this trend line, maybe it comes in around 27.75. But a break above that level, knowing that support is held, I think that would be a really big technical development for the XLF. Of course, as I mentioned, we do have a number of key bank earnings reports coming out at the end of this week. Let's take a look at the XLE on a weekly basis, because I think this is another one that looks very good. Beautiful move up. We took out the prior highs, so we've been putting in these higher highs. And when we pulled back, look at where we bounced 2 weeks ago, right off that 20-week moving average as we turn back to the upside. I think energy is going to make a breakout. I think financials are bouncing off support. Energy looks to want to make a breakout. The XLI industrials, which have been so weak, getting back up above the 50-day, also going down, putting in a double bottom recently. The breakout occurred just below 72.5. Let's call it 72. And then here, just over the last week or two, we did go a little bit below that. But check out the bullish engulfing candle that we had last week. And now we're getting a bounce further off of that to the upside. Again, I'm not going to draw the line, but you could connect these highs and be looking for a trend line breakout maybe around that 75 level. So XLI, another one that I think looks pretty good on a weekly basis. Of course, we have the XLK and XLY, so I'll pull those up. The XLK already made the break above the March high, broke out to a new high, pull back, you hold the rising 20-week moving average, and you turn back up. To me, this is very bullish behavior. The XLY on the weekly chart, after coming all the way back down almost to the 50-day, but holding on a weekly close basis right around that rising 20-week moving average, and then recently breaking out above that prior high, which was about 108, going back down, testing that level, and now turning back to the upside. Another breakout here would be bullish. So I'm still looking at a lot of bullishness in these charts. Would not be surprised if we see further upside in the weeks and months ahead. Even though it is summertime, I think technically the market still looks like it wants to go higher. A couple of stocks individually. BVX, this is in the healthcare space, Bovie Medical. They came out and issued upside guidance for their Q2 revenues. Not a very heavily traded stock, but you can see the volume picking up in recent days as it made a breakout above 4.25. This is a perfect example, in my opinion, where you've got technicals leading fundamentals. Technicals, we've seen the breakout, big volume, and now today we get the fundamental news where revenues are expected to come in above expectations. Anadarko Petroleum, APC, in the energy space, they're adding $1 billion to their stock repurchase plan. The stock, after breaking out above $72, has been holding. Nice reversing, piercing candle off the 20-day moving average on Friday, trying to make a breakout. I think APC looks good. RIG, RIG, which is Transocean. Another chart I think looks very interesting. A huge move up. See the higher prices, lower PPO, negative divergence. We go back down. We reset the PPO at the center line. They're slightly below. We hold on to this support. And I think we're trying to make a breakout of an inverse head and shoulder, although I'd like to see more volume come in to confirm that. But off the top, put in a inverse left shoulder, neckline, inverse head, right side of the neckline. Look at that shooting star candle marking the top. Come back down to the 20-day, put in the inverse right shoulder, and now we're trying to make a breakout. I think right now, 1275 to 1350 is the range on RIG. Let's see if we can close above that level. All right, I did want to talk about one stock. Erin's going to go through some individual industry groups that did very, very well last week, but they've been underperforming. Most of them have been underperforming, but they started to show strength last week. But before we get into that, I'm going to bring up an individual stock, Helen of Troy, HELE. This is a company that, actually, I'll pull up the relative chart. This is a company that just beat its earnings pretty soundly, and they raised guidance. So they beat top line, they beat bottom line, they raised their guidance. I consider that to be the triple in terms of earnings reports. Look at the volume come in on this gap to the upside. That's a huge move, up 15%. And it's been going sideways. And while that might not be that impressive, when you look at the, I think it's durable household products or something like that's the name of the index. But anyways, you see this group has been moving lower. Helen of Troy has actually just been going sideways and even been trending higher in recent weeks, last 2 or 3 months, while the group has been going lower. So what that means is you've got a stock that has been outperforming on a relative basis, not only its industry group, but also the S&P 500. So if this group can turn around, this is a stock that could perform exceptionally well. So we're going to start off with a little different twist on the technical news, and Erin's going to take a look at some of these industry groups that had a really strong week last week. And first, Erin, let's start off with that DJUSHD.
Absolutely. And I thought it was great. You gave me all of these industry groups to look at. And a lot of times what we look at is different than the other person. And, all of these, I thought, to be honest, looked really good in terms of decision point analysis, as well as what you were looking at clearly. So the household products index, what I really liked when I looked at it was this double bottom off of a very long decline. And notice we have a positive divergence here with the PMO. So I thought that looked pretty good. And you can see the volume here on the OBV is starting to come up in the shorter term. I'll be watching to see if it can't beat those tops that we see here from before. So I think that's a really good setup. I'm always cautious, though, whenever the 50 is this far below the 200-day EMA. I mean, clearly, as you were saying, we've been in a bear market as far as the household products index goes. So a lot of times you're going to find that bullish patterns don't necessarily execute as expected when you're in this sort of a configuration. But I really like the setup. I think that positive divergence is especially good. So let's look at the aluminum index. And again, you're going to see some really positive looking PMOs. Again, we're on a PMO buy signal, and notice this is coming in, yes, below the zero line, but right there at the oversold territory that we've seen previously. And when we get these buy signals typically off of this area, we have a pretty successful move. In this case, you can see it didn't amount to much, but it flattened out. We had kind of some warning that that momentum was already being lost before we had that decline. So I like this PMO being so strong, moving toward the upside. I think that looks great. The biotechs, of course, really took off last week. And I think, oh gosh, what was it? One of the biotechs came up with a product. I don't know if you remember, but it was one of the Biogen, that's right. Yep. And clearly, I think that helped this index quite a bit just off of that, because a lot of those biotechs did really well on Friday. And as you can see, even before that, though, we were starting to see some upside momentum on the PMO. It bottomed just above that zero line and is on a buy signal. I see plenty of upside potential here. I don't see really any difficulty for overhead resistance until we get up to this previous top from October of 2017. So that's still a pretty good run up that we could see on the biotech index. Let's see, furnishings index. This one was interesting. You know, it's already, the PMO's already been on a nice move here. You can see the confirmation of the PMO on these bottoms, price bottoms. We're rising just like we want to. The only thing I could say here is that maybe we're looking at the PMO starting to get overbought, but I suspect if I bring this out like 4 years, we'll see that it's really not that overbought. Yeah, because you can see that the typical range, it looks like it runs right between maybe -3 and 3. So a less than 1 PMO value is not going to be considered overbought. So I think there's still a lot of upside left here, and I would look at 415 as your nearest overhead resistance. But I think it looks pretty good, like it's still going to keep the run going. We had talked about life insurance, I know, on some previous programs. And I know you had said that you got back in to Voya. I think that was one of the life insurance stocks we were looking at. And, you know, this breakout looks great. You've got that PMO on, you know, bottoming. It's not quite hit the buy signal. And honestly, that's kind of what I like to see. I don't necessarily want to wait until I get the buy signal. I like to get in on these moves early. And you can see if you were to draw a resistance line here, you notice that it was the short-term resistance and it was resistance, you know, back from May, and we've beat that. We're already above that. I would expect to move much higher, and especially if we get that PMO buy signal. I'd like to see a little bit more momentum as far as the OBV, but other than that, I think that index looks great. Oil and services, nice rounded bottom here. I always like to see those cup shapes. You can see the PMO buy signal is just now coming in, and I'm going to annotate this one because I want you to see the support and resistance. And we'll go with the big fat one here. All right, look at how that matched up here for the support over here. And you could even make a case for lining up here with the previous you know, overhead resistance back here from 2017. But I really like that breakout. I'd like to see it close above there, but the fact we're getting that buy signal just on this breakout, I think is very promising. And you can even see a Head and Shoulders that never really executed. So we'll want to watch that closely because you know, you want to get back above that neckline, and we're just about there. So I think it looks pretty good. And let's go look at, I think the final one I have here is the tire index. And again, you've got a PMO now starting to rise. Look at the positive divergence on this one. You've got this PMO bottom. You could even say this one, and then all of these, those were pretty even, but now you're seeing that positive divergence on these price bottoms with the PMO bottoms coming out of oversold territory. I think the tire index looks really promising. That's all of the industry groups we're going to look at. I know I have some Monday setups. Do you have some Monday setups?
Yes, but we got last week. Let's go through last week.
Yes, and I do want to talk about last week because I think I did pretty good.
Yeah, I think we both had pretty good weeks.
Yeah, if you hadn't had a day like you did today on ZG, I think you'd definitely have beat me.
Yeah, it had 4 or 5 good days, but yeah, it's struggling a little bit today.
There you go. So I was at 43.74 and you were at 60.90. Do you want to take a look at those?
Well, DVN right now is 44.93. So you've got probably about 2.7% just off the top of my head. Looks like you're up. And mine, which was ZG, was at 60.90. It's down 2.3% today, but still at 61.56. So it's up about maybe 1 1/3 or 1.2%, something like that. So you get the win because we go from the time we announced it next Monday to today. But I think both of them did pretty well, and I'm still comfortable with the ZG. I think we may be in consolidation mode. We got fairly close to resistance up near 65. I think we got to 63.56 today earlier. So we could consolidate there, but I think it still looks pretty good. And of course, we've been talking about energy looking better and better, and DVN is actually trying to make a breakout here above the January high. So if it could do that, I would think DVN has a chance to run as well.
Oh, absolutely. Yeah, I think I should show, we should look at those real quick. So DVN was this one that I had. And yeah, you can see right now it's hitting right up against this resistance level. And it does look like it wants to break out above that. The only thing I see here that would be maybe a caution is a rising wedge. And those are, bearish patterns. So you really do want to see that breakout to the upside. But I think that was my target, was right around 45. So. And then you had, let's see, ZG. Look at that more closely. Yeah, I mean, really great run last week. I think you did great because, of course, like you said, we were in here at 60.90, I think, right in there. So nice move. Personally, I would worry about it because I have a top below the PMO signal line, but that's, we have different ways to analyze. So, and clearly what you did turned out to be pretty good. So
I think most of my picks, most of the times when I get into stocks, you're going to see a PMO that's pointing down because I'm getting in on pullback. So normally you're going to see the PMO start to turn lower, but you almost always see the PMO above the zero line, which to me suggests that you have a lot of strength in the stock. It's just the momentum has slowed temporarily, hopefully.
There you are. All right.
What do you got for this week?
Okay, well, let's see. I ran my scan, and surprisingly, I started with a general scan because, lately I haven't been getting much off of these scans. And when I ran the general scan, let's see if we can get that running. Go. There they are, scan results. 69 from my general scan. So I was like, you know what? I don't want to look at that many candle glance charts. Let me go back and see what I can get if I do my more focused scan. Whoops, not the financial one. Focused. So I decided let's just stick to the S&P 500 and 600. And when I ran that scan, I came back down to 22. So that became a little bit more manageable. I just wanted to point out where I was getting the most hits. And the big one I noticed right off the bat was industrials. I ended up with quite a few industrials, and I believe I actually went with an industrial for my pick this week. So let's go ahead and I'm going to take a peek at my Monday setups chart list and go quickly down here. Monday setups. And there we go. So yeah, there's my last week's pick. This is going to be my pick this week, DXPE, but I'll look at that last. It is a small cap, as you can see. So I know the volume's a little bit low on it, but I really like the setup. So anyway, I had 3 others. So amazingly, I looked at 22, and I'm very picky, as I tell everybody. When you look at it, just delete, delete, delete. And there were a lot of them I just didn't care for. And so these were the ones I did end up going with as, other possibilities. And so I'll show you what I'm looking at for these. Most of them, what I look for is that, especially when we're doing Monday setups, is a really short-term risk-reward setup that I like with a PMO that's turning up. And, this one I thought was pretty good. You could do your risk-reward. You could have a pretty tight stop here, and your overhead resistance and or target is right around that 84, 85 range. So I thought there was still some pretty good upside potential. PMO bottoms rising with the price bottoms. So I thought that looked pretty good. TransDime. This one has a nice breakout. I didn't pick it because it's already on this really high move. It's already intraday, hitting near those highs. It's up it's up over 1.5%. I would watch this one. I would definitely watch this one and look for a little bit of a pullback off of this, just a little bit of one. But you've got the buy signal. Look at the scooter is still on the rise. OBV looks pretty healthy here in the thumbnail, turning back up. So thought that one looked pretty good. And Weyerhaeuser, specialty REITs. And this one I thought looked really good. You've got the PMO buy signal. Don't quite have the breakout above this area of overhead resistance, but it sure looks like it's ready to. And with a PMO buy signal right now on tap with an OBV that looks this good and a scooter that's starting to improve out of the 60, 50 range, I think that looks really good. This was a real temptation for me to take this one. But the one I ended up going with is DXPE. And the reason was I really did like the risk reward setup here. The PMO looks good. Look at the OBVs making higher highs right now, healthy scooter. And it's got this almost intermediate term ascending triangle, which is a bullish formation. We tested and set up this overhead resistance line with these 3 touches. And I would be looking for that breakout. And granted, we're already on a move that's almost 1.75% to the upside. I would still be okay with that because I could set that stop really tight around here at 40, 50. If I wanted to go maybe a little bit lower, I could do that. But upside potential is the length of this pattern on the backside. And I think that looks great. So my upside target is like $48. So thought this one looked especially good, but it is a lower volume stock. So just, know that this is going to be volatile and you are going to see big moves like this when it does do its thing. So you have to be prepared to suck that up, I guess is a good way to put it. I would just watch my position size. That's what I do when I see these. I have some great upside potential, but not necessarily need to risk a huge amount just because of the fact that it does have the great potential and setup. So which ones did you have? So I have DXPE, and the last is at 41.72.
All right. I am going with Polo Ralph Lauren, RL. It's in the clothing and accessories space. And I can actually pull up the relative chart here. So we'll take a look at it using the relative chart. And the stock made a big breakout back in May. They blew out their earnings. The stock was on fire, moving up, very strong volume. And really over the last 3 or 4 weeks, it's pulled back. The RSI, which, it's not on this chart, but the RSI had pulled back from up in the mid 70s, maybe even around 80, all the way back down into the 40s. So normally that is a time for me in an uptrending stock to really start to get involved because I can set up my reward to risk very favorably. But RL, I actually bought this one this morning. I bought it a little bit ago, closer to the 50-day moving average, but I have I got in with the intention of getting in a second time at 122. I think this open back here with the heavy volume was 121.91. So if we go back and we fill to the top of this gap, then I'll get my second position at 122. I will keep a fairly tight stop. Probably with any kind of increasing volume, a close below 121 would probably take me out of the stock, so I can keep a fairly tight stop. My target, though, would be up around 142, 143 to challenge the highs from back in early June. So I think this one sets up really nicely. Current price is 126.44, so that will be the price we will use for next Monday. We'll see what happens, but I do like Ralph Lauren a lot. If we look at the clothing and accessories index, you can see this has been a very strong group, and within it, RL, after the huge move higher in terms of relative strength with the earnings and with the heavy volume, has slowly pulled all the way back down to an area of relative support. So I look for this line to start to turn back up again. I look for clothing and accessories to turn up, and therefore I'd be looking for RL to do very well. But you can see it's done well versus the S&P, and the group has been doing extremely well relative to the S&P in 2018. So this is how I tend to try to pick my stocks. I try to get in good sectors that have strong momentum to the upside. Also looking at the industry group having strong momentum, and then try to find stocks that are outperforming within the group. And I think RL fits the bill in all of those. So I like the stock. Next up, let's take a look, and I'll keep it on this relative chart. But let's take a look at EXPD. This is Expeditors International of Washington. I think this is another stock that after earnings in early May came out, huge move to the upside, continued pushing higher. And this was in a group of the air freight group that really has not done very well. So you've got a great stock within a not so great group. And to me, that means if money rotates back in to the group, then you've got one of the leaders. And the fact that it's pulled all the way back down to the 50-day, printed a hammer on Friday, turning back up. Next test is going to be to try to get through the 20-day and then ultimately get back through $74. If it can do that, I think it's going to make a run for 78. So I like Expeditors. Let's see. The next one is GII. And this is G2 or 3, whatever, apparel group, coming all the way back down after gapping up with strong earnings, heavy volume. It's all the way back down now to test gap support. I think, again, this was a stock over $50. Now it's back down at 42 and change. I think you can set up a really nice reward to risk trade here. You've also got some good support coming in at about 41. So if I was doing this one, I haven't traded. I'm actually thinking about this one, but I like it at the current price. I like a second entry around 41, 41 and a half. And then I'd probably keep a closing stop around $40. But I think it's got a shot to go back to 50, and I think that works pretty well on a reward to risk basis. Again, it's in the clothing and accessories area, so very strong group. It has been performing well, although June was a period of relative weakness, just pulling back. And you can see relative to the S&P doing well, and the group again very strong relative to the S&P 500. So I think G3 looks pretty good there. WRD, this one's a little bit crazier in that it has broken down below these prior lows, but I'm seeing a bullish wedge. So if you connect these highs coming across and then the lows, it's kind of squeezing into a pie. Volume trends remain very strong, in my opinion. So I think this is a stock that could do extremely well. It was breaking out back in May, way above prior highs, when its peers were much lower than prior highs. So I think you've got another leader here. And if the group can break out above 610, I wouldn't be surprised to see WRD go on a move to the upside. So I like this one. And then just a couple of others. ASNA, for those who really like the small companies, this could be an opportunity. A big breakout, increasing volume back in May over lots of overhead resistance at about the 260, 270 area. I love these candles going through with heavy volume. We continued moving higher, and now we've pulled back a little bit below that 20-day moving average. But I have a feeling this 330 to 350 area is going to provide some really good support. You've got the 50-day moving average coming in there. But this is the apparel retailers, which have been very strong. And, of course, ASNA over the course of the last couple of months, incredibly strong. We could probably put a little Fibonacci on here. And actually, why don't we do that? Just take 1 second here. And let's see. Start with, we'll try to get it close. All right, not sure why it's not going there. Let's try it again. Well, I'm not getting this to work for me right now, but ASNA, I think if you take a look at it from, was it $2 to $4.75? That's $2.75, pulling back 38% of 275. I don't know. It's probably about $1 or something like that. It's certainly done about that. I'm guessing that it's going to be pretty close to that first initial Fibonacci retracement level at about the 360 area. So I think ASNA looks pretty good. And of course, 50% of this retracement, which is $2.75, that'd be $1.38, which would take us down to 338. So right again into that zone I was talking about, from about 330 to 350 would be your 50% Fibonacci retracement off of that huge move that we saw from early May to early June. So I believe ASNA is kind of an interesting, a little bit riskier because of the size of the company and only being a $3 stock. But I think it's in a good space. You can see that the apparel retailer is very strong. I think this is one that's been weak for the past 4 or 5 weeks, but could turn back higher. So I think you've got a solid reward to risk on this one. And then my final one is ZUMZ. And won't worry about the relative chart. Let's just pull it up. This was the after earnings. It gapped up to 31 and it pulled back. I would watch this low. I think as it gets closer and closer to 22.40, I'm going to be watching for a reversing candle. And if it trades down below, say, 22 and comes back up, closes at 22 and a half, I think that could be the indication it's time to go long and maybe begin to start a turn up. And the way I look at these, when you get these big gap ups with earnings and then come back down, take a look at CarMax. Now, this isn't one of my setups for this week, but see how it gaps up with earnings and it comes back for several days, hits, in this case, the 20-day moving average, starts to turn around after it prints a reversing candle. So if you go back to something like Zoomies, when you got the gap up here and you pull back, what we're looking for is some kind of reversal at a key support level, and 22.40 seems like a key area for me. So let's go ahead and summarize our picks for this week. Here are the setups for both Erin and for me. Erin's going with DXP 41.72. I'm going with RL at 126.55. And then you can see some additional stocks that we also discussed as well. Mm-hmm. All right, it is time for Earnings Spotlight. It's been a couple weeks, so let's move into Earnings Spotlight. This Earnings Spotlight is brought to you by EarningsBeats.com. EarningsBeats.com provides high reward to low-risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. EarningsBeats.com. Better timing, better trades. And I tell you what, Mr. Hopkins, I think we're starting to look pretty good here on the indices as we head into earnings season. What do you think?
Well, Tom, first, how are you doing today?
I'm doing okay. You're not getting 115 degrees, are you, like Erin had?
No. Okay. No. I live about 15 minutes from the ocean, the Atlantic Ocean. Mm-hmm. And I was there over the weekend. We've been 95 steady the last couple of weeks, and the ocean felt like bath water. So 95, I can handle that. 115, no thanks.
Yeah, but our 95 comes with a lot of humidity. I mean, it probably feels like 115. It's disgusting out when it's humid. And
listen, you're talking to a Detroit guy who lived through winters in DC, met nasty winters.
Yeah,
I never need to see snow or cold again. I can handle the heat.
Yeah, good point. Good point. I'm in the same boat. I'd much rather have the heat and humidity and complain about that instead of a foot and a half of snow.
Hey, interesting is my article this week in the Chart Watchers. And again, sometimes I assume anybody listening to this would be getting Chart Watchers. If you're not getting it, you have to get it because they're just, such great commentary. But I really was focusing this weekend on, we got earnings seasons coming up and how you can profit from earnings. And I highlighted the XLF.
Yep.
That financials were stuck in a rut, and maybe that could be the thing that could get the market going. And this morning we're seeing a nice little pop in the XLF, and it's coming just ahead of four companies that are banks reporting earnings on Friday, including Citigroup, JP Morgan, PNC Financial, and Wells Fargo. So, the NASDAQ has just been outperforming the S&P and the Dow, and the Dow has been really pretty bad. But I think that if, the surprise that might get the market humming some, I think could be the financials if they can really perk up. And I'm glad to see so far the XLF is doing its thing today.
Yeah, I think the XLF moving back through the 20-day moving average. I mean, you can see here over the past few weeks that you pointed out. I mean, it's been below that 20-day moving average. We've now gotten four bottoms, really five if we go back to May, in this 26.25 to 26.75 range. And so this is a pretty significant support. I mean, when we talk about significant support, I mean, if you've gone down there once, it's support. But if you've gone down there 5 times, it's pretty darn big support. So the XLF could, I mean, I kind of like the way you're thinking here. I think JP Morgan is going to report better than expected. And I don't think there's a lot of expectations given the way that this group's been trading. So I think JP Morgan could surprise on Friday. We'll see.
Yeah, and I think it could help, again, sort of jolt the market, and particularly blue chips, which have just been pretty bad. Be nice to, to get that moving. I got a couple stocks today.
Okay, what you got?
Actually, one you talked about, which has been an alert, and EXPD. I don't want to be redundant, but that is a stock that we put out to our members on the 25th of June at 72.35 with a second entry and a pullback to 71.25, and they both hit.
Okay. Yep.
We had a stop of any move below 70.70, which didn't happen.
Mm-hmm.
Our target's close to yours. I think you were at 78,
Mm-hmm.
and we were at 77.50. And I really like, the action today. I think that, unless we get a big pullback out of nowhere in the market, I think this thing has a shot at getting up to that 77 to 78 range, and works well for us because it falls under high reward to risk trades.
Yeah, I agree with you. I mean, I like the stock. This was one of three that I came into today looking at possibly purchasing. I did buy Polo Ralph Lauren RL, which I mentioned earlier in the show, but EXP and GIII were the other two that I thought looked really interesting based on a number of things. I mean, you can see EXPD, which was incredibly overbought for 5 or 6 weeks, now has an RSI back in the 40s after some of the selling. Also, off of this move to the upside on very heavy volume, we haven't really seen a move back below 71. So I think your 70 price support level is probably a pretty good one to watch. I think if it goes much below 71, that could be a problem. And a move back up above the 20-day, I think, would start to confirm a push to the upside, especially back up above 74, because you got some gap there as well.
I got another one here that has done actually quite well, PLAB. Okay. And this is one that we put out on June 28th at $7.60. We actually had it out a little bit earlier, and we had a tight stop. Mm-hmm. And so we got out of it, but then it pulled back. So we put the alert out on the 28th at 765 with a stop of any close below 750, so very little downside risk, mm-hmm. with the target of 850. We actually came out of it a little bit early last week mm-hmm. because it was up 8% in a few trading days. But now, what I said to people was if it could clear that, the 20 and the 50-day, it could get to that 850 to 870 range. And sure enough, it got there.
Yeah, the thing I like about this one, and this is what I was talking about earlier with, I don't remember if it was GIII or which one it was, but where we had the gap up and it's been pulling back and I was looking for a key support level. I think this is a really good illustration of that on PLAB, where you have the prior low. See how the highs went higher? If you get up a higher high, you really want to try to see that low in the middle hold on a pullback. And when we came all the way back down, I mean, this stock was up near $10 the fourth week of May. And then over the course of about 4 or 5 weeks, worked all the way back down to this prior low. And that's where the buying began again. So when you start to hit gap support, and I don't know if that's where you got in before, was gap support or the 20-day. I mean, I definitely could have seen that as well. And I probably too would have gotten stopped out because they didn't hold. But I think the biggest level on this chart was probably that prior low at around 765. We held that, and now the thing looks like it's making a run. And I wouldn't be surprised, to be honest, to see this thing go all the way back up to where it popped up with earnings.
Let me go over something else real quick here. Okay. This is a stock, FTR. I'm going to show you the importance of keeping stops in, even though it's having a really nice day. It just got oversold, okay? Mm-hmm. But we had this one out on May 15th. We had 2 entries, one at 938, one at 870, and we had a stop of, we had it out at 930 with a stop below 870, so we got out of it.
All right, okay. There must have been something. There must have been a distribute. I'm going to put in the.
No, I'll tell you, I know exactly what happened. Okay.
Well, here's the 930. Okay, I had to put that to understand to get the unadjusted price.
Yeah, and then but we had a stop of 870, and so we got out of it. The stock proceeded to fall another 50%. You can see until it just popped today. Mm-hmm. And I'm only pointing this out because, Tom, we just did a review of people, like to see what really works. Okay, so we did a review of all of our alerts, for the past 4 or 5 quarters, just completed it. Mm-hmm. And the first 2 quarters of this year, it was really interesting. It's, I would have liked to have more winners than losers, but we didn't. It happened in the first and second quarter. They were challenging. These have been challenging quarters to have good trades. Okay. Mm-hmm. But the first quarter, we had actually, 27 alerts out.
Mm-hmm.
And we had 8 winners and 19 losers, which sounds horrible. It wasn't great. In the Q2, we had 8 winners and 20 losers. Mm-hmm. But the amazing thing is, on a risk-adjusted basis, we just murdered the market. And the whole reason we did that was because the average losses were like 1.5% to 2% on average on all the trades. And I pound this into people all the time that, we talk about, Tom, you can have like half winners, half losers and still make money. Well, we can demonstrate that you can actually have more losers than winners. And if you keep your stops tight and you have good winners, you can actually have good risk-adjusted returns.
Yeah, I pulled up the VIX here because you made a good point. The market environment in 2018, anytime you get the volatility moving up into the stratosphere in the 40s and even upper teens into the 20s, like it's been most of this year, you get a lot more whipsaw. So it doesn't surprise me you're going to have more losers, especially if you stay very disciplined and you let the trades go if they don't work or if support doesn't hold. So that doesn't surprise me at all. But I do think that, and I always say this, low volatility, even though it's boring, for me, it results in much better results trades because you don't get all the whipsaw that triggers these stops. Like you were talking about, only having 8 winners and 19 losers and 8 winners and 20 losers or whatever. That is not surprising at all to me in a high volatility market. That's what I think people have to realize. And personally, I think the volatility is coming back down. I think we're heading back and we're going to get more into the 2017 trading environment.
Yeah, which would be great. Okay, and I know you got your poll coming up here. I just want to mention that briefly, we're going to be doing our Q2 earnings webinar this afternoon.
Yep.
If anybody wants to join, you're going to be joining me. We're going to be talking about setting up chart lists. We're going to go over more stocks. We're going to talk about some upcoming earnings. If you go to Earnings Beats, you'll see there's today's webinar right there. Yeah.
Okay.
It's free. Okay. So be great to have some people join. It's going to be, I think, going to be an outstanding session. Man, this is it for us, right? Earnings season coming up.
Yeah, and I'm going to go through and talk about some, talk about how you can set up a chart list and all. I'm going to spend a little bit of time on that, but I really want to talk about some interesting trade candidates that I think could do extremely well here in the next quarter.
Okay.
All right, let's go ahead and pull up that summary slide first, and then we're going to get into the poll. I want you to stick around here for a second, John, because we want to talk about this poll result. I'm going to get you got to participate in it. But first, here are the stocks that John and I just talked about: EXPD, PLAB, and FTR. And I'm interested in seeing what everybody thinks. Well, I know what everybody's going to answer. When we created this poll, we talked about which of the upcoming earnings reports might produce. Have the better chance of producing a great report. And I knew when I included Netflix in it, it was going to be the number one choice. I mean,
cult of all cults.
Yeah. I mean, it's been a great performer and just continues to blow out subscriber numbers and everything else. So I'm not surprised that this is here, but I actually like answers 2 and 3 as well. JP Morgan, I think, could be a surprise on Friday. We'll see. But it seems like expectations have been lowered so much. And I know that Jamie Dimon believes the 10-year Treasury yield's going higher. He said that. And if he still believes that, I think they're going to produce some solid guidance going forward. That's why I think JP Morgan might be a surprise winner in this earnings season. I like Microsoft as well.
I'm going to give you a little surprise.
Okay.
I like the way UNH looks.
Oh.
I'm throwing one in there. Okay.
All right.
I see it goes down as I mentioned, but I think I like the way the chart looks. To me, it looks like it could be, setting up for a really nice move. And boy, it has the potential, I think, to break out here. So I'm going to keep an eye on that one. Well,
it's in the healthcare space, and I have talked very bullishly about healthcare providers, and that's the group that United Health is in, and that was one of the reasons why I put it in this poll. I don't disagree with you. I think United Health could have a blowout quarter as well. It would not shock me at all.
Yeah.
I think this is not as easy. I knew the answer was going to be Netflix for the majority. And where did you go, Erin? Did you poll?
I did, and I went with Netflix. I don't think I think it's hard to lose with Netflix, and of course I expect them to come out with a good report.
Yeah, I don't disagree with you. I don't disagree with the 42% that have responded with Netflix, but I think those other three, and I do agree IBM belongs on the bottom at 4%. They might have found something. They actually have been beating their quarterly revenues. I think they've done it the last 2 quarters after missing. I think they had lower revenues for 23 consecutive quarters until the last 2. So maybe they're starting to build a little bit of momentum, but I'm not seeing it on the chart yet.
Maybe, but I think if you go back over the past number of years, if you had to put a top 10 of companies that consistently disappoint, they got to be up there.
Yeah, they're definitely up there. I don't disagree with you on that one. They might do it again, but
well, I have to say, I hope JP Morgan comes out with a good one, because that's one of my buy and holds for the very long term. So
great company. Great company, and I honestly believe that's going to be if I had to pick a company right now to hold going into an earnings report, I think it might be JP Morgan, because I think so much has been discredited in that area, the banking space. I mean, they had the 10-year Treasury yield's been dropping. Many of the big banks have not been in favor. It's just been a small cap environment for the past 5-6 months. So I think there's a lot of, I think it's beaten down, and I think they're going to surprise. We'll see.
Yeah.
All right. Always a pleasure to have you on here, John. Look forward to seeing you on here in a couple of weeks.
All right. See you later, my friend. Thank you.
All right. Take care. Okay, we have got the 10 and 10, and I had a question not too long ago. What is the 10 and 10? What does that mean? It just means 10 stocks in 10 minutes that I try to annotate. That's all it is. It's not anything crazy. Nope. And of course, I usually fail, but I try my best to get them done in 10 minutes.
Well, it doesn't help that sometimes we start late, so you got to give yourself some credit here.
Yeah, all right, but the 10 minutes is still hard, but go ahead.
Yes, absolutely. I've done it just a few times, and I definitely agree with you there. All right, here's the RRG of the 30 stocks that did come in. I always like to look at the sectors just to see and check it out. Industrials, that's a big one. And like I said, that's coming up on a lot of my scans right now, are the industrials. And look at technology, definitely lots of interest in some of the tech companies. So everybody go, if you're in the chat room live here, go in and like other people's symbol requests, because the most popular will be the next symbol. Currently almost tied is GE and Twitter. So which one will win? All right, so let's go ahead. Expedia, we're going to start right there.
All right, let's see. Expedia. Okay, a couple of things. I'm still a little concerned about the chart. I mean, this is only going back 6 months, but we had a huge, you can see the heavy volume gap down from back in February. And we have managed to make our way all the way back up, get through it, pull back, and now make a new high. So that all looks pretty good to me. But I just circled the volume here as we're breaking out again to a new high. And I know it's summertime, but I mean, that is really light volume. And we're just not seeing any kind of a pickup in volume on this breakout. And that doesn't mean the stock can't go higher. I'm just looking for confirmation, and I'm not really getting it. So I would pass on Expedia. I think there are a lot of other stocks out there that just look better to me, mostly because, again, I'm just not getting that volume confirmation on this push to the upside. We do have some more overhead resistance. First, you can see these tails and the reversal at about 128, 129. I think so we could run into some resistance there. And then you go back into January, we had a couple of tops just a little above 130. So I just don't see how I can set up a real solid reward to risk trade. And again, without that volume confirmation, I personally wouldn't feel very confident with the trade. So I'm going to avoid it.
All right. And boy, those votes came right in when I mentioned that. And GE is the winner by a mile. Wow. I did want to say that Carl told me mid last week that he had gotten in on GE. And I wish I'd hopped in with him, and I think he's right on, because it does look like it's going to run.
Yeah, it's looking better. We did get a false breakout. I know we talked about this one, I don't know, 6 weeks ago. It looked like things were really improving. We had the PPO, you can see it moved into positive territory and stayed there for a few weeks, which was different than what we had seen during previous oversold rallies. So things looked like they were improving, and then we went right back down and lost that uptrend, lost the 20-day. And I would just say this, when you get a stock like this and you're trying to catch a bottom, if it truly is beginning to move higher, you should start to see the 20-day moving average rising, and it should hold on pullbacks. So anytime I'm in a stock like a GE, which has been underperforming for a long time. If I get in, I'm going to assume that it's because it's beginning to turn higher, and I wouldn't have a very long. I wouldn't have much patience with the stock if it didn't perform. So I'd watch the rising 20-day. At a minimum, maybe go to these recent lows around 1340 or so. But this potentially could be a breakout above a neckline at about $14 within the confines of this overall trading range between 1250 and 1550. I think if we can sustain this move through 14, I think the stock could have a pretty decent shot to make another run at about 15 and a half. But there, I would be somewhat cautious.
All right. And since it did come in second in most popular, let's go ahead and look at Twitter. We haven't looked at that in over a week.
All right. Yeah, I like Twitter. I like the space. I think it's a great performer. It's got that scooter now, which is up at what, I don't know, 99, was 99.9 with today's action. Maybe it goes a little bit lower. There is big volume today, but if we break below that 20-day moving average, especially if we close below 42 and a half, then I think this heavy volume could lead to some additional selling, maybe to go back into this gap zone just below 40, 39-ish. But I think that gap support would be extremely a bullish area to get into the stock. You have the 50-day moving average currently at 38, and that's rising, and you've got some pretty good gap support between 38 and about 39 and a half. So I think short term, let's watch to see if we can close above 42.50. If we do, then maybe the short term selling is over. If we close below it, then I think we could go back down and begin to fill the gap.
Okay. Let's see the next one. How about Square? And again, a popular request that we haven't looked at in quite a while.
Let's see. Square is SQ, right?
Oh, yes. Yeah, I think so.
All right. Square, another one that I think has been in a pretty good space. It is getting close to resistance. So that tells me maybe we're going to turn back down here and just consolidate for a little bit. You see this before where it pulls back, starts to strengthen, weakens again, starts to strengthen, weakens, starts to strengthen, weakens, and then finally gets going. We had a huge run in May through the first half of June. The stock ran from end of April, $43 up to 68. I mean, we're talking about more than 50% in about a 6-week period. So it needs to digest those gains. I think you're probably just looking at maybe a little bit more consolidation here. I wouldn't be rushing into it if I didn't already own it. And I think if I owned it, I'd probably maybe be thinking about trading this range. So maybe selling at the 68, 68 and a half area and looking for reentry in the lower 60s.
Okay. Let's see. The next one I have for you is CUB, C-U-B, and that is Cubic Corporation. It's in the defense industry where there's a lot of interest right now.
Yeah, I think the pullback and holding gap support was a positive development here for CUB. You can see here, the where we were almost 60, and then we gapped up with this heavy volume, and the volume continued pretty strong as we made this huge move up. Well, just recently we came right back down to the 62 and a half, 63 area, and it turned back up. I think you've got a trading range for now, and I would even maybe pull this line down just a bit to catch the recent low. So maybe right there, 62 and a half. Top is 72 and a half. I think we're in a $10 trading range. As we get closer to the 72 and a half, I'd be a seller. If I sold there and it pulled back and hit, say, the rising 20-day moving average, I'd re-enter and I'd continue to trade this trading range until it breaks to the upside. I expect eventually we'll see a breakout.
All right. Next one I have for you is CSIQ, Canadian Solar.
Yeah, it's been in a bad space. It's starting to strengthen a little bit, but look at the volume. It's been very weak on this push to the upside. I think it's got a shot at the 50-day moving average. I'm not sure I'd hold on to it if I was on the long side until then. You can see that the big low that was hit back in February coincides right with that 50-day. Perhaps we get a run that gets us all the way back up there. But to the downside now, we have some fairly significant support around 1160 that I would not be at all surprised to see if that's revisited. So I think 1160 to about 1450 is the trading range. Closer I get to the top, I'd be a seller until I could break above it. And to the downside, I don't know that I'd be a buyer, to be honest. I think that this group needs to show me some things technically before I'd be interested. That looks like a lot of distribution took place the first half of June.
Mm-hmm. All right, how about PetMed Express, our only consumer staples request, PETS?
All right, pets. I don't like this gap down here. I'm going to pull this one up on a relative chart because I think this is in the specialty retailers. Or no, it's not. It's in the drug retailers. I'm sorry. And I just knew that the group overall was down. You can see that the stock had made a little bit of a push. And this is another example, I think, when you're in a group that's not performing well, but you've got a stock that's beginning to perform well, when it starts to show wear and tear, I mean, we looked like printed a hammer on the 20-day moving average, which I'd have been fine with. Next day, we closed below the 20-day. We didn't even bounce off that hammer. And then, of course, I think this one got a downgrade today. The stock is down about $3, $4 actually, 10%. But some of it could be seen because the group itself just has been so weak, and the relative strength of this stock started to turn down about a week, 2 weeks ago. So I'm not a big fan. I think the stock goes lower until we were able to maybe fill this gap and start to see some strength in the group overall. I would avoid it.
Okay. Let's see, from technology, OLED, universal display.
All right, I forgot to annotate this. Bad me. But that, yeah, just the fact that it's the group is continuing to go down. I think that's enough reason to keep me on the sidelines there.
Mm-hmm.
All right, OLED. All right, universal display. We had a gap up. I think that was earnings related. Looks like it was breaking a downtrend, but this is another example. Failure here, breaking down below the 20-day moving average, and in a group that has continued to struggle to the downside. So I have some issues here. I do think eventually this could just be a trading range. Let me annotate. I think the top of that gap is major resistance now. I mean, we gapped up to about 116 and did so with very heavy volume. Came all the way back down and put in a reversing candle. That's a piercing candle right here at the bottom of this downtrend. And that's down at 80. It's a pretty wide range on the stock. And we're starting to move back up, but notice the volume is dissipating as we move up. I think it might run into some difficulties in the mid to upper 90s if it gets that far. I'm going to pass on this one. I'm not a fan here.
Okay. And I know this is not the area that you like, but we did get a request for Wheaton Precious Metals, WPM.
All right, WPM. Well, I'm not a big fan, but I do like the breakout. I'm never disliking a breakout. It's just that, you know, when you're in a weak group, if you fail to hold the breakout, I'd be careful. So in that context, I would be watching this area right in here. As you can see, 22.25 is where we failed back in January. Came all the way up here, tested many days at 22.25, couldn't get through, pulled back, and then we went through. Now, if there's one problem, well, there's probably a couple problems. You're right, Erin. I don't like the group.
Mm-hmm.
So that's one problem. But another problem is after really having a difficult time getting through 22.25, you'd think when we finally do, we'd see some volume coming in. We didn't get that. So the fact that we are breaking out and doing so with not great volume today, this could be a bearish engulfing candle. I would just be careful. If it closes back below 22.25, this could be a head fake and a fake out on the breakout. So I'm going to say be careful.
Okay. And let's see, let's finish it off with an ETF, the emerging markets, ETF EEM.
Yeah, we looked at, EEM. We looked at this one recently, but I don't know how long ago it was. I'm not a fan because of the dollar. I think the dollar goes higher. Recently, we've pulled back a little bit on the dollar, and that's given us a little bit of a boost in EEM. I think to some extent, it comes down to your view on the dollar. And there's two sides of every market. I'm not saying I'm right. The dollar may go lower. I just don't believe it's going lower. I think the dollar is going to go higher. And so, you know, if the dollar continues to consolidate, and I have been looking for a little bit more consolidation in the dollar because of a negative divergence, that could enable the EEM maybe to get up to 45. But beyond that, I'd be suspect. I don't think we go beyond 45. So I'm going to pass on EM. I don't like it.
All right. And that is, my friends, 10 stocks in about 10 minutes. I think you pretty much hit it, honestly.
Pretty close.
Yeah. All right. So there you go. And I will get those symbols up in the Market Watchers Live blog in our chart list, our live chart list, where you'll find all of those symbols with the annotations. And with that, we'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
All right, it's time for our final market update here on Market Watchers Live. As you can see, all the major markets really are up. The Dow doing especially well. Like I said, I've been getting a lot of industrials in my PMO scans. Not surprising when you see these nice moves and a nice rising trend. S&P 500 also up. Looks like it's coming back off some of its intraday highs. NASDAQ is up, but mainly consolidating today after hitting an intraday high in the morning. Mid caps are also on the rise. Russell 2000, we're seeing the same. And actually, in the very short term, I see an ascending triangle here that we might see a breakout come from. So we'll want to watch that closely. It's sitting at its intraday highs, could be making a move higher at this point. We can see that the Canadian markets, the TSX is also on the rise. Looks like it's hit its intraday highs, maybe for a pause before moving higher. Treasury yields are up somewhat, currently reading at 2.856. And we've got the TLT, big gap down, and does seem to be trying to make its way back up with a little bit of a rising trend. But in general, TLT doing poorly today at 122.03. UUP, the dollar, we're seeing a drop, and we saw a drop in the morning, managing to make its way back up into positive territory, currently reading at 24.84. USO is mostly unchanged, having a little bit of a rocky day in trading, mostly beneath Friday's close. So we're looking at negative numbers right now, but we could see it break out above last week's close. We're just going to be waiting on that one. 14.94 is the current reading for USO. And look at gold, big gap up, but has been falling steadily ever since the open. But we're still up, reading at about 119.20 for GLD, and the VIX is traveling lower. And that concludes our final market update. And let's go ahead and get started on the DecisionPoint Report. Okay, so let's go ahead. I'm going to start off with looking at the 4 major indexes and their weekly charts to give us an idea of what the trend is looking like. And then we'll follow that up with the condition charts of the ultra short-term, and intermediate term indicators. And then I'm going to go through the big 4, as we call them, the dollar, gold, oil, and bonds. And I'll try and get a look at those weekly charts as well for you. So let's go ahead and we'll get started actually with the Dow. Like I said, industrial is doing especially well today, but we were already seeing some improvement here. And you're going to see this in all of the daily charts for the 4 major large cap indexes that we cover. And so you can see that the bottom, we're getting ready to see the PMO reaching up for a buy signal. Definitely want to see that, but this is the important move, and that is today, where we're seeing that breakout from this area of consolidation after we pulled back to the 200-day EMA, at which point it held. And you can see we're having that similar move here where we're hitting that 200-day EMA, but then managing to come off of it. So I think we're looking good. Overhead resistance, certainly you could make a case for the highs in May as possible overhead resistance, but I would be watching this 25,500 area for the Dow. Let's go ahead and take a peek at the weekly chart. And as you can see, we're still looking at a rising trend off of the 2016 low here, following up for our rising bottoms trend line, holding up quite well. Mainly, I want to point out the fact that we've got that 43-week EMA, and that is holding as well. It acts very similarly to the 200-day EMA on a daily chart. So wanted to point that out. And there you go, that 25,500 area really looks like where the Dow is ready to go head to. The one problem I have with most of the weekly charts is the weekly PMOs. They are currently on sell signals. We've had a few fake outs. If you look here in the thumbnail where the PMO has bottomed and then not managed to keep up with that move. So I would like to see more deceleration and possibly a bottom on the weekly chart for the Dow. NASDAQ daily. Another good breakout, looking to test some all-time highs, just above 7,300. Again, we've got these nice PMOs bottoming and rising. And look at the OBV on the NASDAQ 100. Very much a strong OBV with that rising trend, continuing with this rising trend and breakout that we had on Friday. So I'm looking for the all-time highs to be tested for the NASDAQ 100, possibly this week. The NASDAQ 100 weekly chart, again, we're in these really nice rising trends. Notice the difference, though, with the PMO. We've got a bottom above the signal line for the intermediate term PMO, and it still remains on a buy signal for the NASDAQ 100. OEX, S&P 100. And here we go. We're getting ready to test overhead resistance right now and today for that June top. I will watch that closely, but I suspect we're going to see the breakout above that overhead resistance and a test up here to 1235. We've got a PMO buy signal in the wings, and again, very strong OBV. We're seeing the volume coming in the way we would like it on these moves. The weekly chart for the S&P 100. And here we go. Now you noticed on the Dow, we were still seeing a declining PMO, but we're not seeing that on the NASDAQ, which, like I said, is still holding its weekly PMO buy signal. And now we're looking at the S&P 100, and we're getting a bottom on the PMO. And again, I like to see that, but we have seen some fake outs recently for the PMO in that rising trend. So if we get the breakout above that 1225 area for the S&P 100, I would look for that PMO buy signal, obviously, on the weekly chart, but I think that would give us a bit more confidence in this PMO bottom that we're seeing right now on the OEX weekly chart. S&P 500, here we go. And it has also had a bottoming PMO, and you can see OBV is rising nicely, which I like to see. And actually, if you look in the thumbnail here, we're now reaching a high on the OBV that we haven't seen for quite some time. And of course, you always want to see the OBV rising with price, and that's what we're seeing right now. So volume is supporting this move. You can see that 20-day EMA was coming down, but it bottomed and it's started back up. I would expect a move to test all-time highs. I think we're on the way to that. Like to see that breakout to that 2,800 level on the S&P 500, but I think everything is looking very good in the shorter term for the S&P. And then if you look at the weekly chart, there you go, another bottom on the PMO. So we're waiting on the weekly PMO to turn up for the Dow, but on the other three scoreboard indexes that we follow, we're seeing PMOs rising now on weekly charts. And I think that's obviously a good thing. You want to see it. And, you know, on the weekly chart, at 2,800 level for the S&P 500, if you draw a rising bottoms trend line here and you draw a horizontal across that overhead resistance, you're looking at an ascending triangle, and the expectation is a breakout above that overhead resistance and a move that could be the size of the back end of that pattern, and that would be a very sizable move. We could see certainly new all-time highs and a continuation even higher than that. Okay, so I'm going to look at the S&P 400 now. I want to get a peek at the mid caps and what they are doing. You can see again these nice rising PMOs, a nice PMO bottom. Look at the OBV on the S&P 400 IJH ETF, just rising nicely. Again, hitting some highs we haven't seen yet this year, so I think that's positive with that buildup of positive, upside volume. We've now popped up above the all-time highs here for IJH. Let's take a peek at its weekly. And there you go. So the S&P 400 IJH is already starting to hit some all-time highs. If we get a close, you can see right here, if we get a close anywhere in this area, it will be a closing all-time high for IJH. You can see that the PMO was in decline for IJH, but it has turned back up on the weekly chart. Very positive, like the looks of that. And let's see if I had some annotations there on my other one. Yes, rising trend channel, you gotta like that. And again, that PMO buy signal is intact. Let's look at small caps here. This is the S&P 600 ETF IJR. And we can see a move again above overhead resistance at the all-time highs. IJR is trying to make some new all-time highs as we speak. Nice PMO bottom here, heading back up toward a PMO buy signal. And again, the volume, very much liking this volume coming in. The only thing, if you want to look at these is the declining volume. But I would tell you that with holiday trading last week, that doesn't really bother me, especially when I see an OBV that is on the rise like it is. So I think small caps continue to look strong. If you look at the weekly chart, still I'm seeing a rising trend channel, and the intermediate term PMO is rising and is now managed to get above its previous top. So this is looking pretty good here for IJR. The only thing I guess I could say that maybe would be a concern in the future would be the fact that we are sitting here at the top of this rising trend channel. So, you're always vulnerable to a test, that'll bring you back down to the bottom of a trend channel. But with the markets looking as strong as they are, very strong PMO in the intermediate term, I'm not expecting any kind of major pullback here on the S&P 600. Russell 2000 ETF, IWM, similar look. We're getting new all-time highs right now. The PMO is rising and getting ready to have that buy signal. And check out the scooter on IWM, already quite high at 95 and just holding there and moving even higher. And again, OBV volume, we're starting to see that nice increase on the volume on the upside, coming with this breakout move on IWM to all-time highs. Let's look at the weekly chart. That is the monthly. I want to look at the weekly. Here we go. And actually, I'm going to annotate this. Whenever we get a little bit of an adjustment on these, you have to adjust the resistance line. So let's get that in there. So you can see we came back, tested the tops that were here back earlier in 2018, and it was a successful test of that support. It is headed back up. And like I said, we're looking at new all-time highs, and we have a PMO that is not overbought and still rising. So I think small caps still look quite good when you're looking at the weekly picture as well as the daily picture. All right, let's go ahead and look at our indicators. I like to, as I talk about getting the conditions of the market, and the PMO is helping us with price trends and momentum, but these indicators give us a better feel for what the condition of the market is. And I will start here with our climactic indicators. This chart's really a useful chart to look at every day because it is climactic. It's very, very short term. And what you're looking for are climaxes on the chart. You're looking for those spikes and those highs that you don't normally see. And that gives you a clue as to whether you're looking at an exhaustion or an initiation. And when I look at this chart, when we're looking at last Friday's readings here on breadth, we had another climactic move, higher than the one we had before on this price rise that we got originally. We were coming out of, when we got that first one, that first bar, we were coming out of this area of consolidation. And you could see that move right there coming out. And that to me told me we were looking at a buying initiation and to look for higher prices. And now we're getting another confirmation on breadth with that last move we had, still looking at climactic moves. So I'm in the buying initiation camp. Right now, when you look at the VIX, and I use an inverted scale when I'm thinking about it in the very short term, because it is a sentiment indicator after all, and sentiment is contrarian. And with the VIX, I find it to be, again, a really good sentiment indicator for the very, very short term. And at this point, what I like to see on it are, tests and breaks through the upper and lower Bollinger Bands on this inverted scale. We're not quite there. We're still sitting about on the average, but we are rising. And I'm going to be watching to see how low we can go as far as the readings on the VIX. Currently, the Bollinger Band on the upside is at, 1054. So we have some time to get up higher. We're sitting at that 1289 level. So I would watch to see if we can get some VIX readings down to 10. And I think that's very possible, especially if we get that breakout that everybody's expecting, including myself, above that June top. Short-term indicators. Here we go. They are on the rise and they are starting to get overbought. Makes me a little bit nervous, but we've seen them reach higher highs in that overbought territory. They're rising strongly. We could see some hesitation here, but I'm not overly worried about these overbought conditions on these short-term indicators because we are looking at a bull market configuration. And if you recall, when you're in a bull market configuration, overbought conditions a lot of the times can clear themselves without a big decline or pullback. You can get that through consolidation. So even though these short-term indicators are getting overbought, I'm not overly worried. And here's one reason is my intermediate term indicators are looking fabulous. We're seeing bottoms above the 0 line, heading up toward positive crossovers. I think this looks very healthy for the intermediate term. And to me, it tells me that yes, there's every opportunity to get back up and test all-time highs. But I'm still very careful here to look at that 2,800 level on the S&P. So I'd like to see that breakout, but all the indicators are telling me we're going to get it. Big Four, dollar. Let's start there. Dollar has really experienced quite a pullback, and you can see a double top here. This one's kind of tough. I still feel like the strength of the dollar is there, but we might actually need a pullback again a little bit further to that 2460 level. I am thinking we're going to get that bounce off the support at 2470, but you look at the PMO in decline and putting quite a bit of distance between itself and its signal line. You can see the scooter is failing. There's a lot of failure going on here. So it's hard for me to imagine that this support level at 2470 is going to hold. Might need a little deeper pullback to that 2460 range. Got to watch for this PMO to start at least turning back up. Right now, it just doesn't look healthy. If we get a fulfillment of this double top, on the good side, it would be a drop of about, let me see, about 2480 to 20, so about a 20 cent height, 25 cent, 22 cents height to fall lower. And that would definitely take us down to test that 2460 level. Weekly chart for the dollar. You've hit some very, we've turned back at that area of overhead resistance. And there's how important to me that support at 2470 hold. That's a pretty important support area when you look at that top that we had at the end of 2017. I want to see that support level hold. The PMO is starting to decelerate a little bit on the weekly chart. But I think overall in the intermediate term, I think we're going to be all right with UUP. We just might need a little bit more pullback. And as you can see with that pullback on the dollar, we're seeing some move on gold to the upside. Bounce off. I mean, I love it when you see these bounces and they hit right on those support levels that you've seen before. I mean, it's almost identical bottom here. And we got that bounce. But here's the problem. We hit that overhead resistance right here, and I was using the bottoms from back here in October and November, and we got to stop right there at that overhead resistance. If the dollar pulls back a bit more, of course, we should expect to see gold do a little bit better, but overhead resistance is really tough here. Momentum is switching over, but look at that configuration of the EMAs looking pretty ugly. Weekly vision, and I'm going to go through the last couple very quickly. Very important support when you look at this level here for gold back at the end of 2017. We're seeing the PMO on the weekly chart hitting negative territory. Not a good sign. We haven't seen that since the beginning of 2017. So the intermediate term picture, I'm still looking for that pullback to 1200 on gold. Oil. It's found some support here. I think we're going to be able to hold that. The PMO still has room to rise, but it is decelerating somewhat. And let's see the weekly chart here. There we go. Getting ready to hit some overhead resistance at 16. I think you could experience more pullback, but we just got that IT PMO buy signal, but that PMO is really overbought. The TLT daily chart, and then we'll hit our summary slides. Got a nice breakout on TLT, pulling back toward that breakout level. That tells me that we could expect some higher prices on bonds. I've not been a fan of bonds, but let's face it, it's been in a nice rising trend since the beginning of June. And if you look at the, let's go back down here, let's look at the weekly chart, and then we'll finish up. And there you go. We have a head and shoulders on bonds that is still in play. We're getting a move here that might start testing that right shoulder. And if we do that, Carl has said, and I agree that that pattern will be busted. And you can see a buy signal for TLT. It really does look like we're going to get a move higher here on bonds going into the next week. And that concludes the DecisionPoint report. And right here, you can see the scoreboards. This gives you all the trends. You'll find those on the member dashboard. And at this point, S&P 100 and NASDAQ just recently switched to short-term trend model buy signals. And then let's keep going here. All right, market condition. We looked at those indicator sets. I'm going to have all of these in the Market Watchers Live recap, so I'm not going to read them to you. And then also you can see as far as the big four where we stand. I'm looking for a pullback on UUP to continue. Gold is bouncing, but it's hitting that resistance. Oil, I think we still might see some more pullback here, and bonds holding support. I think we're going to be okay, even though we're decelerating on that PMO. And that concludes the DecisionPoint report, and that concludes our show just about, Tom.
Yeah, we got a pretty good day, though. We got the Dow Jones Industrial Average up almost 300 points right now. We're seeing some outperformance there by many of those multinationals that have been lagging for so long. So it is nice to see that, we're getting some bounce there. And, of course, we got JP Morgan reporting on Friday, which might start to turn the scales in favor of the Dow. We'll just have to see.
Yeah, absolutely. No, great show. Happy Monday. I think our Monday setups are looking pretty tight. So we'll have to see how we can continue in this next week. But I'm thinking we're looking pretty good. We all went higher this week, audience, you and me. So I think we're still looking for some more upside.
Yep, I would totally agree. I did mention in my blog article that the 9th of the month is the second worst day of the calendar month. Not today. Doesn't happen every month. But we do see that tendency. But we'll see whether or not we can eke out some additional gains today.
Yep, there's our upcoming schedule, and I'm going to sign off and say goodbye, Tom. Great show.
Another great show. I agree. I want to thank all of you for being with us today. Please remember to complete the survey as you exit. I do have that workshop coming up tomorrow. I'd like to get some ideas. And, of course, we love to get your feedback and hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we'll see you back here tomorrow. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.